You don't lose because the market is hard. You lose because a different version of you shows up every time money starts to disappear. That version is not the same person who calmly reviews charts on the weekend, not the same person who once mapped out a very clear risk management plan, not the same person who promised, "From now on, I'll be more disciplined." That version appears when the trade is down 2R, when your heart starts beating faster than normal, when your eyes glue themselves to every tick of price as if staring long enough will make the market change its mind. Trading doesn't drain your account first. It drains your nervous system first. And when your psychology begins to crack, all the knowledge you once learned quietly leaves you, one piece at a time. Here is a truth few people say directly. Losses in trading are not just about losing money. It is the feeling of being betrayed by yourself. You knew where the stop loss should be placed, but you moved it. You knew you shouldn't enter without a setup, but you clicked anyway. You knew you should keep position size small, but you increased the lot, just this once. And after each of those decisions, what gets withdrawn is not only money from your account, it is the trust you once had in yourself. People on the outside will say, it's just one losing trade, but only a trader understands. Each loss taken while your psychology is weak feels like a small cut repeated over and over into your self-respect. You begin to doubt your ability to read the market. Then you doubt your system. Then you doubt the way you learned. And eventually, you doubt whether you even have what it takes to survive in this game. The most dangerous part of a losing streak is not the negative number. It is the moment you look at the chart and no longer trust your own decisions. At that point, you are no longer trading your system. You are trading your desire to escape discomfort. And emotions always want to reduce pain immediately, while trading only rewards those who accept short-term pain in exchange for long-term edge. So, the conflict begins. One side is the plan. One side is emotion. And during losing periods, emotion always speaks louder. You start to feel that staying out of the market is harder than losing. You feel the silence of the chart is scarier than a red candle. You enter not because there is opportunity, but because you cannot stand the feeling of losing while doing nothing to change it. That is when trading turns into a psychological reaction instead of a probability-based decision and process. And from here, the spiral begins to form. You no longer lose because your system is wrong. You lose because your psychological state makes you unable to execute the system correctly. You start chasing the market, then fearing the market, then hating the market. But in reality, what you are truly struggling with is not the chart. It is the growing feeling of failure inside yourself. And then something very strange begins to happen. You no longer truly see the market. You see your pain reflected on the price chart. Every red candle is not just price going down. It is a reminder that you were wrong again. Every small pullback is not just a pullback. It feels like the market is mocking you for exiting too early or entering too late. From here, your perception begins to distort without you realizing it. You are no longer reading price action. You are reading your own emotions. If you are in a loss, you will see every reversal signal as crystal clear. If you just got stopped out, you will see that the market should have gone the other way. If you are afraid, every setup will look problematic. The market does not change as much as you think, but your nervous system changes hour by hour, and that state determines how you interpret everything you see. This is when a trader enters an extremely dangerous phase, the phase of trading to escape emotions, not to make profits. You open the chart with a heavy feeling in your chest. Not exactly fear, not exactly sadness, but a restless tension that is hard to name, like you owe the market something and must take it back at all costs. You no longer ask, is this trade according to my system? You start asking, which trade can help me recover fastest? And that question is the turning point where the account begins to bleed faster. Because when the goal shifts from executing an edge to erasing the feeling of loss, you will accept risks that you previously knew were stupid. Increase the lot just a little. Hold the trade longer, maybe it will come back. Add another position to average the price. Each action feels reasonable in that moment, because it makes you feel like you are doing something to fix the mistake. But in reality, you are trying to fix emotions with money. And the market never rewards actions that come from hidden panic. At this point, your nervous system is almost always in high alert. You hold your phone and still think about the trade. You eat and secretly check the chart. Before sleep, The image of the last candle of the day still floats in your mind. Your body is living in fight or flight mode, but you call it trying to make it back. This prolonged stress does something very dangerous. It reduces your ability to make rational decisions. The part of the brain responsible for discipline, patience, and long-term thinking begins to weaken, while the emotional brain where fear and greed live becomes more active than ever. So, you are not truly lacking discipline. You are trying to trade with a brain that is tired and under threat, and a brain like that wants only one thing: to escape discomfort immediately. So you close winning trades too early just to be safe, but you hold losing trades too long because you cannot stand confirming you were wrong. You begin doing the opposite of every long-term profitable principle just to gain a few minutes of short relief. This is the biggest psychological trap of a losing streak. You no longer fear losing money as much as you fear the feeling of being a failure. And to avoid that feeling, you keep entering new trades, hoping one big win will wash away all previous mistakes. But what you are truly searching for is not profit. It is emotional relief. Trading at this stage becomes a drug. Each new trade feels like a new hope, a new chance to feel like you are still in control, until the account drops deeper and the feeling of losing control returns, even stronger than before. The loop tightens. You are no longer fighting the market. You are trapped in a silent war with your own emotions. And the most painful part is, on the outside, everything still looks normal. You still sit in front of the screen, still analyze, still enter trades. Only inside, you are slowly collapsing. Then at some point, emotions no longer explode. They start to shut down. You no longer panic when you lose. Your heart no longer races when price moves against you. You no longer get angry when stopped out. It sounds like you've become tougher, but this is not resilience. This is emotional numbness after being overloaded for too long. Like a body that cannot endure more pain, so the brain chooses to reduce sensation to the lowest level. You look at a negative account without much reaction. You enter trades without clear expectations. You don't even feel like analyzing carefully anymore. You just trade because it is what you still do every day. Trading now is no longer hope, no longer ambition, no longer a challenge. It becomes a lifeless habit. You open charts out of inertia, enter trades out of inertia, exit trades out of inertia. No excitement, no fear. Just a faint feeling. It doesn't really matter anymore. This stage is dangerous in a very different way. When you still feel fear, you still want to protect your account. When you still feel pain, you still care. But when you start feeling nothing clearly, you can accept risks you would never have taken before. Increase size not from confidence, but from indifference. Hold losing trades not from hope, but because you're too lazy to exit. No stop loss not from special strategy, but because a very dangerous thought appears. Whatever. Let it be. This is a form of self-destruction in trading that few recognize while inside it. You don't blow the account with emotional all-ins. You erode it with quiet surrender. Each small, careless decision, each "it'll probably be fine," each random trade is one more step away from the disciplined person you once wanted to become. And the most painful part is you still remember clearly that you used to trade better than this. You remember the feeling of patiently waiting for setups, the confidence of entering according to plan, the days you shut down the platform without regret. But now, the distance between who you are and that version keeps growing. Not because you became dumber, not because you lost ability, but because you fought stress for too long, without recovery. Like an athlete who never rests between rounds, eventually losing, not because the opponent is stronger, but because the body can no longer respond accurately. Trading in psychological exhaustion creates a very dangerous illusion. You think you are trying, but in reality, you are just staying in the game too long without being clear-minded. You stare at screens for more hours, but decision quality declines. You want to recover more, but self-control weakens. And deep inside, a question begins to appear that you dare not say out loud. If I've tried this hard and still lose, maybe the problem is me. That question does not only make you doubt your skills, it makes you doubt your worth. Trading, from a game of probabilities, turns into a measurement of self-esteem. Each losing trade feels like proof you are not good enough. Each red day whispers, maybe you don't belong here. And when self-belief shakes, discipline cannot survive. Because discipline requires a person who believes today's actions will create good results in the future. But when you no longer believe in that future, following the plan feels meaningless. So, you keep trading, not because you believe you will win long term, but because you don't know how to stop. You fear stopping means admitting failure. So, you stay. Stay in exhaustion, stay in doubt, stay in increasingly poor decisions. And that is how a trader doesn't blow the account instantly, but slowly loses both money and confidence in silence. Then one day, in a very ordinary trading session, you suddenly realize something you had always avoided. It's not the market working against you. It's not that your system stopped working. It's not because you lack a new indicator or a more advanced strategy. The problem is the state of the person you bring into each trade. The same setup, when calm, you enter at the right spot. When chaotic, you enter a bit too early. The same stop-loss level, when clear, you leave it alone. When afraid, you move it a bit further. The same risk management plan, when stable, you keep size consistent. When trying to recover, you increase it just this once. No decision looks terribly wrong at the moment you make it. The deviations are always small, a bit earlier, a bit bigger, a bit longer. But trading is a game of accumulation, and small repeated deviations under psychological pressure create results completely different from what you backtested. You begin to understand a painful but real truth. You don't lose because you don't know what to do. You lose because, in crucial moments, you are no longer the person capable of doing what you know. The knowledge is still there, the strategy is still there, but the executor has changed, like a very skilled driver, who in panic has shaky hands, presses the wrong pedal, and cannot see clearly. The problem is not the car, it is the nervous system of the person holding the wheel. And this is the most important psychological turning point of a losing trader. The moment they stop asking, "What is wrong with the market today?" and start asking, "Is my state today stable enough to trade?" That question sounds simple, but it requires admitting something the ego hates, that sometimes the problem is not the method, but the instability inside yourself. You start noticing your worst trading days are not the days the market was hardest. They are the days you didn't sleep enough, argued with someone, were trying to recover after losses, or traded because you couldn't stand staying out. You begin to see clearly a truth you always ignored. The chart doesn't only reflect supply and demand, it reflects the inner state of the person looking at it. When you are anxious, you look for signals that confirm fear. When greedy, you exaggerate opportunities. When tired, you choose easy decisions instead of correct ones. The market stays the same. Only your psychological filter changes. And for the first time, you understand risk management is not just percent risk per trade. It is managing your mental state before clicking enter. Some days, appropriate risk is not 1%. It is 0%, because your psychology is not stable enough to handle more pressure. This is not weakness. This is a level of maturity very few traders reach. Knowing when not to trade, even when the system gives a signal, because you begin to understand a very important truth. You are not only trading the market, you are trading your own nervous system. And if that nervous system is in stress, fear, exhaustion, or resignation, then every trade you take is no longer a high probability decision, but an emotional reaction disguised as technical analysis. The moment you see this clearly, a very small but very deep change begins. You no longer just look at charts for entries, you start looking at yourself first. Am I trading today from discipline, or because I feel uncomfortable and need a sense of control back? That question doesn't make you trade more, it makes you trade less. But the trades that remain start to carry a completely different quality, not rushed, not desperate. No need to win immediately, because you understand the real battle in trading has never been on the price chart. It has always been in your ability to maintain a stable enough state to not sabotage the edge you spent years building. And then the rebuilding process begins. Not loudly. No explosive enlightenment moment. Just a very quiet decision. I can't keep trading like this anymore. Not because you stopped loving trading, but because you understand if you continue in the old state, you will not only lose money, you will lose self-respect. The rebuilding phase does not start with finding a new strategy. It starts by slowing down. You stop trying to recover fast. Stop trying to double the account in a few weeks. Stop comparing yourself to others. Instead, you begin caring about something you always ignored: your state before opening charts. You begin noticing there are days you sit at the desk already mentally tired, tired from work, tired from personal matters, tired from lack of sleep, tired because yesterday's losing trades still haunt you. In the past, you still traded on days like that because you believe professional traders must trade every day. Now, you understand something different. A professional trader is someone who knows when they are not clear enough to make decisions with money. So instead of asking, "Are there any setups today?" you start asking, "Am I stable enough today to take risk?" Some days the answer is no, and you shut it down. The first time you do that, it feels very uncomfortable, like you are missing opportunities, like you are falling behind. But at the same time, a new feeling appears, very small, but very real. You are starting to protect yourself, not protecting your ego, but protecting your ability to stay in the game long term. You also begin changing how you see losing trades. Before, a loss was proof you were bad. Now, you ask, did I follow the process correctly? If the answer is yes, that trade is no longer a failure. It is simply the cost of maintaining an edge. This shift does not remove the pain of losing, but it stops you from turning that pain into more self-destructive decisions. You slowly relearn how to tolerate discomfort without needing to immediately do something to escape it. Price moves a bit against you. You stay still. No moving stops just to reduce anxiety. No adding positions just to feel like you are fixing it. You begin to understand the ability to endure short-term discomfort is the foundation of long-term profitability. This process is not exciting. There is no dopamine like those old all-ins. It is slow, sometimes very boring. Sometimes you doubt whether this safe way will really take you further. But unlike before, you no longer trade to prove anything to anyone. You trade to keep yourself in a state where you can still play tomorrow. And that is the most fundamental shift. Trading is no longer where you seek adrenaline. It becomes where you practice stability. Each day you follow one small trade correctly is far more important than a day you make a lot of money in chaos. Because you are rebuilding what was most damaged: trust in yourself. Not the belief that I will win big, but the belief that whether the market wins or loses, I can still trust the way I make decisions. And when that trust slowly returns, you notice something very interesting. Profits no longer come from forcing the market to give you money. They come as a natural consequence of no longer sabotaging your own edge. You don't trade better because you are smarter. You trade better because your psychology creates less noise. Calm begins to replace impulsiveness. Patience replaces urgency. Clarity replaces panic. And for the first time in a long while, you open charts without carrying the feeling that you must win. You carry only one simple question: can I execute the process correctly today? If yes, you trade. If no, you stop. It sounds simple, but to reach that state, you had to pass through losses, doubt, panic, numbness, and moments of wanting to quit. And that journey is what turns someone who knows technical analysis into a trader who is psychologically mature. Eventually, you realize you are no longer trying to become a trader with strong psychology. You are simply a person who understands your emotional limits and does not place yourself in situations that easily break those limits. Stability does not come from no longer feeling fear. It comes from no longer acting based on fear. Your heart still beats faster when taking larger trades. You still feel discomfort during losing streaks. You still have days where you want to click randomly just to scratch the itch. But the difference now is, between emotion and action, there is a pause, a breath, a moment long enough to ask, is what I'm about to do coming from the plan or from inner discomfort? That pause is the boundary between traders who survive long term and traders who keep restarting from zero. You no longer try to eliminate emotions. You learn not to let emotions drive. Just like in life, maturity is not the absence of sadness, anger, or fear. It is not letting those emotions decide for you. Trading gradually becomes a very strange place. It is no longer a battlefield, no longer where you prove yourself, no longer where you seek adrenaline or recognition. It becomes a mirror. Each day you sit in front of charts. You don't just see market structure, you see your own psychological structure. You know you didn't sleep enough just by noticing you want to enter early. You know you are anxious by how you want to take profits too soon. You know you are greedy by how you want to ignore risk management. The chart is no longer something to conquer. It is something that helps you observe yourself with deep honesty. And a paradox begins to appear. The less you try to control the market, the more you control yourself. The less you feel the need to trade often, the higher the quality of each trade. The less obsessed you are with making money every day, the more consistently money comes. Not because you discovered a new secret, but because you removed the thing that used to destroy every edge you had: inner chaos. You understand that sustainable profit is not built on days of extreme euphoria. It is built on very ordinary days, when you do your job correctly without needing to feel anything special. No dramatic victories, no once-in-a-lifetime trades, no all-in and flip-the-game moments. Just hundreds of small decisions made in a psychologically stable state. And you also accept a very liberating truth. There will always be periods when you trade worse. There will always be times when emotions are stronger than usual. There will always be losing streaks. But that no longer terrifies you like before, because you know, as long as you do not lie to yourself, do not trade in a state of losing control, do not turn emotions into bigger size, you are still in the game. And in trading, staying long enough is more important than winning very fast. In the end, you realize the biggest enemy you ever faced was not market makers, not news, not algorithms. It was the version of yourself led by fear, greed, exhaustion, and loss of belief. And your greatest victory is not an account that grows tenfold. It is the ability to sit in front of the market with a mind calm enough to not sabotage your own future over a passing emotion. When you reach that state, trading is no longer a battle to beat others. It becomes a very personal journey, a journey of taking responsibility for each decision, learning to live with uncertainty, and maintaining inner stability in an environment designed to trigger every human psychological weakness. And if you stay long enough on that path, you will understand one very simple thing. A good trader is not someone who never feels fear, but someone who, even while afraid, still chooses to act with discipline instead of emotion. And that is the true foundation of survival and freedom in trading.